Sentimental, fundamental, and technical. There are three types of traders in the world, and only one of them actually makes money. No, I'm kidding, guys. It's your boy Rockstar. Today we're going to be talking about the three styles of trading, and yes, you can make money with all three of them. But the purpose of this video is to break it down for you guys so you can understand it a little bit better and make an educated decision on what kind of trader you actually want to be. So sit back, relax, and enjoy the video.
Just see those sleigh bells jingling, ring, tingle-tingling. I'm on it's lovely weather for a sleigh ride together with you. Outside, snow is falling and friends are gone.
So for a long time, guys, there has been a big debate on which analysis, right? Whether it be fundamental, technical, or sentimental, which analysis is more important to be doing in the markets? What kind of traders make the most money? And I've always said, look, I'm the biggest believer that the biggest room in the world is the room for improvement. We should always been improving on our craft and getting better and better every single day. So my question is well, why not just get good at all three? So what we're going to be doing, guys, is I'm going to be breaking down these three types of analysis, and I'm going to do it in an order that I believe most traders start off with to where eventually they get to. And hopefully this all makes sense to you guys. And if it does, as always, hit that thumbs up button. Feel free to share it with a friend or two. And make sure y'all subscribe to the Rockstar fam and stop playing yourself. So we're going to start this up, guys. Let's jump straight into it. The first type of analysis that we're going to be talking about is more or less where most traders are at. I love this type of analysis. It's called the technical analysis. So there are a lot of technical based traders, and what that is kind of just looking at the charts and based on certain things like support, resistance, trend lines, things like that. It's understanding that the markets make these moves. They do the same thing over and over and over again. It's identifying these patterns, right? Identifying these patterns in the markets and looking at the technical side of how the markets move. So I'll go ahead really quick and I'll draw up a quick support resistance so you guys can kind of just see exactly what it is that I'm talking about. But it's being able to identify these key levels, these key zones that the market comes back to over and over and over again. So let's go ahead and draw it up real quick. I got to look real quick. That was a quick example of some support and resistance. Being able to identify the floor and the ceiling of the market to know that, okay, if market comes up to these areas, all right, to these areas, we're looking for sells. Market comes up to these areas up top, we're looking for sells. And if market happens to make its way down to these areas on the bottom, we are looking for buys in the market. On the bottom, buys in the market. On the top, sells in the market. So support and resistance based, pretty much all technical traders use support and resistance. If you don't, then you, my friend, are not a technical trader. Now, aside from support and resistance, we also use things like trend lines, for example. So I'll go ahead and I'll draw up a quick trend line and I'll show you exactly how this looks and how it is that we can identify, just based on technicals, right? How it is that we can identify pretty much which way the market is going to be moving next. So this is a short little trend line just by looking at the higher highs in the markets. You know, come up, hit, boom, come up, hit, boom, right? I'll draw it out for some of my newer people, but we have a touch here, okay? Went down, retraced back, came back to the same trend line, right? All right, kind of almost hit here, didn't necessarily hit, but pretty close. And then right here again, we have a nice hit. Okay, so that is a trend line. Being able to draw a trend line and identifying, okay, now when is a trend going to break? Well, take a look at this. If we were to do something like this and pretty much pinpoint our lower lows in the market, okay, and draw something like this, all right, this looks kind of like what we will call, okay, in the market, a falling wedge, right? A wedge. So when we're looking at something like this, it's very simple. As you guys see, the wedge tends to get smaller towards the end of the trend, right? You see it starts to get tighter towards the end of the trend. So what that tells us as technical traders is that, okay, it's going to keep bouncing up. It's going to hit this trend line, but eventually it's going to break the trend. The question is, when is it going to break the trend? Well, usually you'll either see, as we did here, it hits, right, and it breaks here, or it might even hit, bounce off, and come a little more into the wedge and break there. All right. But regardless, something like this is how we're able to identify just these types of patterns, like this, triangle shape that we see here. I say triangle for some of the newer people, right? I don't want to confuse you, but you guys see this kind of triangle where obviously the market stays in the triangle, right? Bounce, 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 and then finally it breaks. Well, that is because towards the end of the triangle, it gets nice and tight. The market doesn't want to stay in that tightness no more, right? It gets claustrophobic and makes its way out of the triangle, okay? Now, once again, it could have either done it here, okay, which it did, and it broke out, or it could have hit this, bounce, and came back in here, okay? What you want to do is kind of just get good at, obviously, looking at where you think it was going to happen. Now, if we're going back to support and resistance, I want to show you something really quick. The best way to find these support and resistance levels is look at what the market did previously. So if we're talking about this lower low where we put this line at right here, right? Look at this lower low. I'm going to go ahead and put a support line right there. All right, so put a support line right here. And I want you to look into the future a little bit where eventually our markets broke the downtrend and now it's moving to the upside. But look at this. This previous support level has now become a resistance to the market. So you see how it works? You see how it happens over and over and over again? So before the market was on top and couldn't break below, now the market comes back to this key level, right? After this breakout to the downside, comes back to this key level, breaks the trend, and boom, hits this level. And now, as you can see, 2 candles in, 2 candlesticks in, the market is making its way down. This is how Forex traders make their money on the technical side. So now that we talked about the technicals, let's talk about fundamental real quick. So what a fundamental analysis is pretty much basing the analysis off of things like the news, what's happening in the world right now, the economy, right? A lot of stock traders, and this is why, and if you guys missed my stocks versus Forex video, I uploaded a few days ago, but I was talking about most stock traders kind of being more on the fundamental side of trading, whereas most Forex traders are on the technical side of trading, if that makes sense. So when it comes to trading stocks, you're looking at a lot of what? News, company financials, what's happening with the CEO of the company, so on and so forth. With Forex, fundamentals is that, but with what's going on with the currency itself. So if there's any major impact news, if something happened to a specific country or, a president or, whatever, I don't know what people have around the world. I know not everyone has presidents, right? But little things like that, what's happening in your economy, in your world, okay, will predict what happens to your currency. So I'll give you guys a quick example of this. Right now, we are looking at the DXY, which is the dollar index, right? So today, if we're looking at ForexFactory.com, by the way, if you don't know what Forex Factory is, it is a site where pretty much you can see the news, right? You can see what's going on with each currency pair news, if there's news for that day, so on and so forth. So if we're looking at today at 10:45 a.m., we had some major impact news on the US dollar. We have a red folder here, which means that's major news. Now, as you guys can see, that major news result in a positive for USD. So it's green. That means it's good. So it turned out good for the US dollar. Now, to kind of just back this up into saying that news actually does play a huge role with what happens in the market, I want to show you a few things. So look, we have major impact news 10:45 this morning, positive, right? Which means the US dollar should be going where? Up, right? The US dollar should be going up. So I want to show you real quick how this looks. So if we were looking at the currency strength meter, okay, and I know some of you are familiar with currency strength meter and how it works, but if we're looking at currency strength meter, obviously we see here, US dollar is strong. The US dollar is very strong. So that's what? One confirmation. So look, we got the news, good, major impact news, went good on the US dollar. Currency strength says the USD is strong. So now it's going hand in hand. Now let's put everything we know about the USD right now and look at it on the actual charts and see if it aligned with this morning. So if we're looking at the charts, we said what? I think it was 10:45 this morning or... yeah, around 10 o'clock this morning, right? So if we're looking at the 10 o'clock mark, this is 10 o'clock right here. As you can see, right before the news happened, we had a little dip. So look, you got these candlesticks, right? These candlesticks, inconclusive, not really sure. We got the dip. But from 10 o'clock on, we got a nice push up with the US dollar on the USD index, right? So look, very simple. What that means is any currency pair going against the US dollar, okay, should be going down, should be going bad. Any currency pair that the US dollar is going against, US dollar should be going up. So let's take a quick look at this. Let's look at USD JPY. Okay, so if we're looking at USD JPY, look at about 10 o'clock today. There you go. So look, from 10 on, we went up. So buys on USD JPY, we're good. You guys see that? All right, we're good. This is the 30-minute time frame, by the way, so a couple hours in. Right, let's look at Euro USD. So this is the Euro going against the US dollar. All right, let's look at the 10 o'clock mark. All right, boom. So look, 10 o'clock mark right here, as you guys can see, major impact news came out for what? The US dollar, and boom, it pushed the Euro down completely. We got this huge candlestick going down, and it's still going down now. Why? Because the US dollar is strong right now. It's strong right now. So what that means is, all right, on the fundamental side, what that means is that obviously if the US dollar is strong, we're looking for buys on the US dollar and sells against everything that's going against the US dollar. All right. Hopefully that makes sense. Now, third and finally is an analysis that I feel like more or less comes with experience of trading. It's not really analysis that you can really have or get good at as a brand new trader. It's something that comes with understanding the markets, and that is the sentimental kind of trader. So what a sentimental trader is it's a trader that goes based off of their own knowledge or their own emotions towards how the markets move, right? And what I mean by that, obviously I know as new traders, some of you are very emotional in the markets. That's not what I'm talking about. What I'm referring to is just knowing and understanding, let's just say, a specific currency pair, right? So going back to what I always talk about, when having a trading plan, you want to be able to identify a time of day that you trade, as well as a few currency pairs that you focus on, right? So let's just say, for example, I focus on USD JPY. And that's the main currency pair that I focus on. Well, being that we already know that the markets do the same thing over and over again, right? We tend to learn everything. We tend to learn new things about this currency pair every single day to the point where we master this currency pair. We know exactly how the candlesticks move, right? So we talk about candlesticks reversal patterns. You talk about wicks, knowing if there's a long wick, the rejections, little things like that. You know, gap trading. You know, the emotional side of it in saying, okay, I feel like this is going to happen based off of what I know, based off of what happened before. I feel. So when you're saying that, you are the sentimental kind of trader, okay? It's not really going based off of technicals, right? It's not going based off of the news. It's going off based off how you feel, based off of what you know about that currency, based off of what you know about what the currency does during that time, or what the currency does when you see a long wick, for example, or a specific candlestick pattern. Okay, but what I want to know is, all right, drop it in the comment section below. What kind of traders are you? And if you were focused on a specific style, and now that you know all three styles of trading, you may want to switch it up or start implementing some of the other styles. Put it in the comment section below. Let me see, exactly where you guys are at and what it is that you're more into. Me personally, I love the technical side of trading, but every time when I get on in the morning or if I get on at night, the first thing I do before I even mark up my technicals is I check the news to make sure there's no major impact news that's going to affect my analysis. Even though I love technicals, I still check news. And there are specific currency pairs that I focus on more than others, so I know in my gut exactly how they move versus other pairs. You can start to understand things like their average daily range and how much they move, and if they're volatile currency pairs, so on and so forth. So I would say I'm mostly a technical trader, but I do implement all three styles. I don't think one is better than the other. I think mastering all of them will make you the best possible trader that you can be. And if you can agree, go ahead, hit that thumbs up button. If you disagree, hit the down button. I don't really care. Doesn't matter to me. But hopefully you guys got something from this video. Hopefully I provided some kind of value to you in your life today. And if you're not already subscribed, make sure you hit that subscribe button. Check out some of my other Forex related videos, binary options related videos, and maybe even just life related videos. As always, guys, this is your boy Rico, aka Rockstar. I'm out. Peace.
Feel just like a rock star.